Hi everyone, once again. It's the first time today I'm here. So hi, we are here today with the Canadian retail sales new data release. And today my partner in crime is Michael. So as usual, I'm going to start with some fundamental background, and then Michael will continue with some technical issues. So. Canadian retail sales for the month of August are due in some 7 minutes, with market consensus expecting a monthly growth of just 0.1% in the headline print and 0.2% in the core figure. So recent numbers in the Canadian economy allow investors to expect just tepid results from today's data release and not to be on the optimistic side. In addition, while market participants continue to digest yesterday's the Bank of Canada's interest rate decision and revised growth outlook, it seems just only big surprise could be able to have a significant impact on the Canadian dollar. So I would like to remind you that yesterday the Bank of Canada left its overnight lending rate unchanged at 0.5% after cutting it twice so far this year. And the Bank of Canada said that the economy rebounded just in line with its July's predictions, being supported by robust household spending. Still lower commodity prices, which also lowers Canada's terms of trade and dampens business investments and exports, prompted the central bank to revise downwards its growth outlook for the upcoming 2 years. So the central bank expected the nation's economic output to increase by over 1% this year and 2% in 2016, compared with its July's forecast of 2.3% growth next year. For 2017, the central bank predicted the growth to be just 2.5% instead of 2.6%. So as usual, on the whiteboard you can see some tables and a graph, as well as what kind of impact our community members expect the data release to have on the dollar-loonie pair. So you see that there is just a minor majority of those who expect to see a bullish impact on the pair. Also, I have chosen one insightful comment in my point of view from Wall Street 6, so you can double-click and read it. But now I guess it's time to hand over to Michael, and I'm going to the Bloomberg terminal to publish the data immediately in the chat section. So see you soon, Michael.
Thank you, Eugenia. Hello, everybody, once more. So for this data, we have US dollar, Canadian dollar currency pair, and I've chosen the positive surprise trading strategy since the data is expected to be better than in the previous month, and maybe even better than expected. Let's see. So the sentiment for the given pair is bearish, also close to neutral at 50.64%, with pairs slightly outnumbering the bulls. With the Canadian dollar being bought in 51.52% of all cases, and the US dollar being sold in basically 44.5% of all cases. Concerning the pending orders, we can see that in the 50 pip range, 58.33% of them are to sell the US dollar, while in the 100 pip range, 52.17% are to buy the greenback. Of market participants, we've got only one other broker, that is Oranda, with 56.56% of their traders holding short positions. So if we move to the market reaction table, where I have the Canadian retail sales, the specific one for the Canadian retail sales, but the reaction should be the same as the core retail sales, since they are released at the same moment. And the largest reaction was 43 pips 5 months ago, and the smallest one was only 33 pips 4 months. Oh, sorry, 31 pips 3 months ago. And the approximate average reaction, which we calculate from these, is around 37 pips, and this is the reaction we could expect today. So based on this average reaction, we can set the take profit and stop loss levels accordingly, with the stop loss level currently located at 1.3169, somewhat close to the 4-hour R3. So bolstering this resistance level in case the data is actually worse than anticipated, we could see this bear rise towards this approximately 2 days. For 5-minute chart, that is a big amount of time. So this could influence as well a decline today. Another thing that I would mention is we have sell signal over here, since the shorter period moving average crossed the longer period one to the downside. So that could also give us some heads up on what's going to happen to this pair, and it will decline as we are anticipating. And what I would like to mention is the technical indicators, which are giving bullish signals in the 10-minute, 4-hour, and the weekly time frames, but giving mixed signals in 30-minute, hourly, and beyond, and for the given day at least, and unfortunately giving us negative. So I'm basically unable to confirm this, and that happens to the pair from the bearish scenario. That's where I'm finding tap. And like I said, other banks and companies, according to the Bloomberg survey, are expecting retail sales. Morgan is the best forecaster of the retail sales, and expecting the retail sales to remain flat, while the Bank of America Merrill Lynch is expecting the retail sales to fall in line with expectations. And concerning the core retail sales, the Bank of America Merrill Lynch is also expecting them to fall in line with expectations, but the Royal Bank of Canada is actually expecting a minus 0.1 result, so worse than anticipated. And we already have the data with the Canada retail sales better than expected, but the core retail sales is actually worse, falling to remaining flat since the previous month, and the jobless due to the having the raise on the core retail sales, and it's actually getting slightly around this, but nonetheless the take profit level was not seen, supported somewhat by the 4-hour S1 on the 131 major level. Not yet for the response sales dailies, which could also influence the price to go further to the downside if it is going to be worse than anticipated. So I hope you guys had a good trade, and that will be all from my side. Back to you, Eugenia.
Thank you, Michael, so very much. I guess we did a very good job. Thank you, everyone who was here with us today. So we wish you a very nice rest of the day and successful trading. So see you tomorrow as usual at 12 GMT during our Fun Friday webinar. And now back to you, Doug.